Welcome back to the Watch List. Our next guest, Thomas J. Hayes, Chairman and Managing Member of Great Hill Capital, joins me. Actually has some stock picks for your portfolio as well. What did you think of the week that was? I do want to talk about some of the earnings that you had on your radar for different reasons, but how do you think markets behaving?
Yeah, I think this market wants to push higher, Nicole. I think you have still a lot of trapped bears who sold at the exact wrong time in the beginning of April. Over $1 trillion of hedge fund and CTA money got flushed the day before Trump put out his tweet. Now is a good time to buy. So every bit of good news, and we've had good news, 13.3% earnings growth for the quarter with 98% of the companies that had reported. That's up. Instead of expectations, we're at 6%. And we're going into the next quarter with reasonable expectations. So I think on balance, this market wants to push higher. The jobs report was interesting considering the Beige Book talked about a slowdown in labor demand and a slowing in the economy. I think that kind of surprised the market to the upside to see some strength. But the trend is down. The Fed will still be in the market cutting at the back half of the year. Right now, it just seems unclear whether it's going to be one cut or two cut. You still have a 63% chance of one cut in September. So I think a lot of good stuff and a lot of powder on the sidelines. So as this thing pushes higher, people are going to be forced in, and particularly those who sold low, missed the recovery, and now have to chase to save their careers.
Understood. Yeah, if you sold in April, you are not happy today. That's true at the bottom, right? You only lose money until you actually sell. You have a few names like Lululemon and Broadcom on your radar as far as earnings. What story do they tell?
Well, Lulu, I think the surprise there was that they were blaming the economy, saying that U.S. consumers are being cautious and intentional. That seems a little suspicious in the sense that you're seeing a tremendous amount of competition from Aloe, from Athleta, from other companies coming to bear. So they're blaming the economy. They're blaming the consumer. Their comp store sales were up 1% year on year, which was a little bit anemic. And they brought their guidance midpoint down from, $15.05 of earnings this year down to $14.68. So the market didn't like it. It flushed it down 20%. This is a high quality business, but the concern is that they're now saying they're going to raise prices due to the tariffs, and that's going to impact their margins by 110 basis points for the full year. So declining margins, slow comps year on year, and the market just completely flushed it out. As it relates to Avago, they beat as well, but the guidance was less than very high expectations, and it was a sell the news event. It had rallied 30% into the print, so people took some profits. The AI related business was up 46%. The non-AI related business was a little bit anemic. People were a little bit concerned about that. Free cash flow is still strong, buyback still strong, but the stock taking a breather.
Yeah, understood. So right now, if I look at AVGO, Broadcom, it is trading down about 4%, but has been a winner. 1 year up 87%, and just in 1 month up 22%. You have names that you like: Albemarle, QXO, Stanley Black & Decker, and also Generac. Is there a theme between these picks, or do they each have their own story?
Well, I'm known as Turnaround Tom, so I like businesses that are out of favor, that are going to recover. Materials is expected to have the second highest earnings growth in 2026. We want to get positioned ahead of time. They're going to have 17% earnings growth. Albemarle, big player, number one top lithium producer in the world, lowest cost producer, some of their mines in Chile. And lithium is a very cyclical business. You see it throughout the years, even before EVs. They have ample liquidity to make it through the oversupply in the short term, which we expect to rebalance in mid-2026. The operating leverage in this business is second to none. Once lithium rebalances as the smaller players shut down production, Albemarle is going to be the big winner. And as we're going to see, demand from 1.2 million metric tons last year to 3.2 million 5 years out. they're going to win. The whole EV story is all China. It's an unnatural subsidized government market in EVs. There's 60% of global EVs. That is not going to stop anytime soon. The Chinese government's going to keep pushing EV, which is going to benefit Albemarle as their competition goes out of business. They'll be last man standing, and they are going to mint money like it's going out of style. This stock is down huge. It can be up double to triple over the next 3 to 4 years. We think this is a huge out of favor cyclical opportunity that this happens every 5 to 8 years, and we are buying it at the trough. As it relates to housing, also out of favor. Why? Because of higher rates. Rates are going to come down. Why? Bessent is focused on the SLR. He's going to reduce capital requirements, which will create an enormous amount of demand by banks for treasuries. They'll be back in the market in a big way. And then you have the genius, and he said that'll lower 10-year yields, which is what mortgage rates are based on, by anywhere from 30 to 70 basis points. Then you have the Genius Act. Stable coins could be approved, where you're going to see right now the market for stable coins, which are backed by U.S. treasuries, is about $250 billion. That could go up to $2 trillion over time, creating $2 trillion of new demand for treasuries, which will bring yields down on top of it. So that's going to be very positive because mortgage rates are priced off the 10-year. So I think the second half, you're going to see a 30-year fixed mortgage. You can timestamp this. We're going to see a 30-year fixed mortgage below 6% before the end of the year, and animal spirits are going to be back. New housing starts. The federal lands are opening up from this administration. It's going to create a lot of land, believe it or not, in metropolitan areas to bridge the 3 to 4 million unit housing dearth in the U.S. and the huge demand from millennials. So how do we play it? We don't want to play the warring factions. We don't want to play the home builders that are going to be producing and a race to the bottom as their margins contract as they fight each other on price. We want to take advantage of the arms dealers like QXO, which is Brad Jacobs' company. It's a building supply roll-up. They started with Beacon Roofing. He paid 11 times EBITDA. He's going to double EBITDA over the next couple of years through implementing technology like he always does. Do a roll-up. If you follow what he did in XPO Logistics, you made 50-something times your money. If you follow what he did in United Rentals, you made 70 times your money. I think this is going to be a 5 or 6 bagger over the next 5 to 7 years, even from these levels. And even today, Wolf Research was out upgrading the stock. It's whatever it is, 17, 18 bucks up to $44. We think that's a little premature, but it's definitely going to get there and more over the next few years. Then you got Stanley Black & Decker. If you're going to build houses, you need tools. Craftsman, Stanley, DeWalt, etc. They have been recovering margins after the COVID overstock. They've destocked. Now they're restocking, increasing margins. The last time they got margins up to the level that management is guiding by 2027, they earned $8 a share in earnings. The stock traded north of 150. Right now, I think it's trading at $65. So there's huge upside over the next 3 years. And then finally is Generac, way to play the housing recovery, also interest rate sensitive because a lot of people finance home standby generators. They've got 75% of the market. They are going to fly. This stock is still down 75%, even though it's generating record free cash flow. Revenues are recovering. Their commercial and industrial business is improving. There's going to be a lot of backup energy and storage for data centers. That's going to be a monstrous business in addition to the home standby. And we're entering hurricane season. So other than that, how was the play, Mrs. Lincoln? We've got a lot of stuff here for you, Nicole.
All right, you really do. And Turnaround Tom, that's a good nickname. And it's fun taking a look at those key names, too, of Albemarle, QXO, Stanley Black & Decker, Generac, and more. Thank you, Thomas J. Hayes, Chairman and Managing Member of Great Hill Capital. Thank you, Tom. Coming up.